Hey. Whoa, it's the no notes version of the Community Rip Live here on Stocktwits. It's your boy Bags, Ben. I've been called worse here in my mom's basement, just trying to not lose so much money. We got Nick, just fucking do it, over there to my left. Gautam, Gpaisa, and our good friend Matthew Tim Payne. Matt, welcome back to the show.
Hey, thank you guys for having me.
What a time to come on the show. I mean, we've got panic in the streets. We've got pandemonium in the market. Like, there's so many places we could go. But as always, well, let's pull up the cues and just look at this atrocious tech trade that many of us are in right now. Matt, you were giving us some thoughts on, there are opportunities out there, and it doesn't have to be all tech and all fast movers and high growth.
No, it doesn't. That's the big thing. And if you look at like my Stocktwits feed, like that's the one thing. Like I'm going to be switching it over from anonymous to myself again, and I'll be able to do some more things with tickers and things like that. But the thing that I've been noticing, and I've been just trying to point out is we're seeing this rotational trade. It's been tough. It's tough on people that aren't used to it. You're just seeing different names. I mean, we talked about it last time, like starting to look at cyclicals. Well, I mean, that worked out really well, right? But what has happened is, you got a little bit of bounces in a lot of these higher flying tech names. And now you're kind of seeing that the wing come out of the sail out of a lot of them. And people just aren't ready for that. You're seeing staples run. You're seeing names that just typically have been acting horribly. And it's a little bit more of a defensive trade now, especially with what's kind of coming out of, whatever. I hate even saying into politics, but like the White House, like people are just a little bit more defensive of what's coming out of there. You saw it in the weak dollar trade, and now you kind of got this little bit of rebound. The big scare would be is a dollar starts screaming higher too, right? Like so, that's why you're kind of seeing these people be a little bit more defensive, seeing different names. But some of the names are still working well, especially in the cyclicals. But you did see some of the wing come out of those as well. But it's a different environment that we're in, and I kind of expect that for 2022 to be a little bit more volatile, a little bit more choppy, and more rotational. So I haven't changed on that yet.
Well, GP had been warning us for months to be in real world stocks, and by cyclicals, Matt, that sort of lines exactly up with what you're saying. But Nick, when can one start buying into this? I mean, I've got the cues up here, and you can see we had been making higher lows, right? Are you looking to catch the knife anytime soon? Do you think that this is a stay out right now? GP's waving his hands no, so I know where he's at.
Yeah, I mean, if you're looking at the daily, we're still within the range that we've been in for the last 22 weeks. Yeah, individual names are getting blown out. We kind of talked about it a little bit yesterday, but the 613.50 on the Qs was basically the high and low of like several high volume candles, and that's basically like mid range. Today we took that out. That's probably why we're continuing lower. We're back within the bodies of both the 1010 candle and the November 20th candle, which means we can certainly go after the lows of those candles. So if I was going to pick a spot to say like, all right, I'm going to try and catch the knife, it would probably be about 585.
So I guess somewhere around the body of this 1121 candle.
Yeah, I'm sure there's people probably thinking like 600 round number, probably easy spot to play against. It's just the candle looks pretty nasty right now, and I certainly just wouldn't be surprised if we went after the low of where we're at. If you head out to the weekly, we are at kind of a spot. We are at kind of a rising trend line from a few of the weekly charts that I've shared. And it would actually, I mean, it would look really pretty if we held right here. But I think a lot of that's going to be determined on Google and Amazon and how the market responds to both of those. They're going to move the cues.
GP, you're waving your arms. You were saying no, down, down, down. I wasn't able to watch the show yesterday, so maybe enlighten me.
I got accused of being a wet blanket.
Yeah, we did. We've all.
Well, I mentioned when that happens, you're usually a good tell, right? That we're near or at the bottom. So that's all I'm saying.
15 minutes into the episode, and everybody was like, boo these guys.
All right, let GP say his thing.
Yeah, sorry.
So, like, guys, we're under January lows. We're about on the Qs. We're almost at the December lows. Like, none of this stuff is bullish. Like, if we're not bullish enough, we're definitely not bullish enough. We're definitely not bullish enough. But we're under all these lows. Until we start reclaiming it, there is no reason to be a hero here. There is no reason to put something on. If you look at the NQs on a technical basis, go to, if you can get to about 4-hour chart on the NQs.
I'm getting there.
Yeah.
Someday I'll get there.
All right, so like zoom out to October. If you look at every single one of these candles, it is a big red candle. But we're under January lows. 607.05 is the Q January low. December low almost got tagged, or if it already didn't get tagged. Like you can try to put on stuff against that, but realize that we're at the precipice of just getting destroyed, and there is a relentless, aggressive seller at this top of the range in the Qs for the last 4 months. Like, I don't, like, even if we bounce 1,000 points tomorrow, you tell me what's going to participate, because I don't know. It's a crapshoot. Today is Microsoft and Apple. Tomorrow might be Nvidia. It's a crapshoot of what's participating. And the thing that's confusing about all this stuff, I know it's, Matt, you said cyclical and defensive, and that's a part of that. But Home Depot's up, BLDR is up, Lowe's is up, Royal Caribbean Cruise Lines was up until about 3 minutes ago. If that is not consumer discretionary and risk on top of all that, take a look at regional banks.
Yeah, we talked about KRE right before you came on.
Yep.
Yeah, so like we can talk about risk on, risk off, but it's a bifurcated market right now, so there is no rhyme or reason for you to put on anything without some really tight stops. Otherwise, you're going to get smoked.
Well, Matt, that's what you were saying, right? There's things to trade out there. It doesn't all have to be high flyers, these sexy names, these hot names that have been going crazy in 2025. It's 2026 now.
Yep, exactly. And
just one more thing before you continue, Matt. So the part of the cyclical is it rotation before the overall distribution, right? So are they just rotating out of tech names into these cyclicals before the entire market gets smoked? So that's the part that you got to keep in check as well. Even if they're rotating into Royal Caribbean Airlines, KRE, and all these other things, if the market continues to show weakness, all of those are going to come down with it. There's nothing that's going to stop it.
Well, that's where I was going to go next, right, Matt? If things are being rotated like you two are suggesting, and we can see is happening, how long do those names stay safe before everything sort of becomes infectious, right? And we have a cataclysm that everything is a sell now.
yeah, I mean, and that's usually a tough call. So like to kind of take on the GP, I mean, it's tough to be a buyer like indiscriminately here, right? Like you can't. I would not do that. Like this is a part of the market where you want to really like mind your stops and, you know, be very tactical. This isn't a time to be super strategic and say, hey, we're going to have a huge up year. It just really isn't. We're also going into February, right? Historically, not a great month on seasonality. So, and honestly, the February through March and even April lately hasn't been great. April's usually a really good bullish seasonal month, but I mean, it just from recollection, I'm not even pulling up the data, but like the last 5 years hasn't been great in that month. So like we're going into a tougher period of the market, even though like January barometer says it's going to be bullish this year, all these things. That doesn't mean we're not going to kind of head lower, right? We've seen another area, healthcare has done fairly decent, right? Like that's another defensive area. We're talking about that. I've done a Medtronic trade now twice in options over since December and since our last call, really. One of them was a huge, you know, like 200 some percent, almost 300% winner, 300% at one point, but you know, we took the gains a little bit lower. And then just hit another one, you know, while we're hitting shorts on technology. So it's a tough market from that perspective, and you need to be able to just be able to adjust and then honor your system here, because you know software you're seeing is just falling out of bed, and it's not an easy trade. I think to just carry on to GP's point of where we are in the market, there's put support at 600 on the Qs and is it 680 on the SPY. But if those give up, I mean, you're going to have a quick move. The Qs, the next level I would look for if that 600 level gives up. I mean,
we're there now.
Yeah, I was going to say you get a quick move down to 580. I mean, that's another decent move, right? Like that's where your next kind of real big open interest level is, and they're going to move it straight there. And you kind of have it looks like 200-day moving average is kind of creeping up towards that level as well. So it makes a logical standpoint now that if they break that 600 level, you're probably going to be stuck in a downdraft. You know, it's not guaranteed, but I mean, you know, there's sellers out there and they're trying to take their profit, and a lot of that is, you know, in January we saw was more especially bigger funds, right? Like they didn't want to take their profits in 2025, but they're certainly going to take them in 2026 that are on any big winners, right? Like so because they have the whole year and you're going to take some losses during it. So that's just kind of where I'm at with it. I don't know. It's not a place to be a hero, like GP said. It's just really not. And if you want, you can do some tactical shorts too. I mean, but again, both ways. You are got to be very, very tight on your trading positions here, because you can get your face ripped off either way.
Open question.
We did get an extreme tick today for the first time throughout this. We got a minus 1308.
Yep,
which is a good sign of capitulation. So you could, and we're starting to kind of little base here at 600, but like you said, Matt, we can base here and then the sellers come in and smoke it. This will accelerate. They started off the morning buying, I think, 12,000 of today's Q600 puts or something like that. It was some large number at 35 cents. And look at that, they're already crushing it. So straight down since that moment. There's, yeah, I'll let you guys talk about it, but you should be really fucking worried right here if we don't hold, because this is going to get distributed to all hell.
Very similar to like the tariff sell-off would be
without any news.
Yeah.
Well, I think there's been some news. I think there's been some news to sort of bring this all down. I mean, there's been some inconsistency on what to expect from the nominee for the Fed chair, right? Mm-hmm. There's the AI's killing software, all of software. So there's been some news. So I wouldn't say no news, but my question is, let's say 600 is the magic spot, right? We've kind of bounced off of it right now, short term. Excuse me, but this is open to any of the three of you or all three of you. What turns us around and gets us out of this cycle? Is it a magic Trump tweet that all of a sudden sends the market? Is it somebody coming on air and say, "Well, we're net buyers"? What turns this narrative around, because I don't know that you can change what the Fed chair is going to do until he's actually in there doing something. And I don't think you can change what is being brought up about AI and software until the CEO of Claude comes out and goes, I was just joking.
You're not getting that. Claude's not. He's not saying that.
No, he's not. Right. And we're not going to find out what the Fed chair thinks, or the nominee for Fed chair, until June.
The one interesting thing about the Fed chair, and I'll say this, is he was, a Federal Reserve board member before. He was
very hawkish, very hard money.
That's where people are concerned. Now, he is very pro, kind of house building and things like that. So like, that's actually something like that is good for home builders. Like GP saying they're up, I did trade Toll Brothers not that long ago, and I'm out of it now, but that was the one that was kind of holding up a little bit better. But he's usually a hawk. And here's the other thing is he's worked for Druckenmiller. So Druckenmiller now has the ear of two very important members within the administration that were, well, not the administration, but that are high up there, right? The Fed chair and the Treasury Secretary. So he's got the ear of both, it's kind of an interesting dynamic, right? Like, I don't think we've ever really seen it like this. Even last time it wasn't exactly like this, right? Chair Powell he was a Cargill guy, and then Mnuchin was his own. But it's an interesting dynamic, and it'd be interesting to see. I know he said that Warsh would be open to reducing interest rates, but again, precedent does not tell you that, right? Like,
right. But Trump has railed for months on, rates need to be lowered, and just common sense says he's not going to nominate somebody that isn't going to at least bend their ear somewhat to him. That doesn't mean completely do what he says, which, we can get deeper into politics about that later if we want. But at least you would think he would have a sympathetic ear to what the administration is telling him, considering that is what the administration has consistently said for 13 months.
Yeah, and I don't disagree. I think that's actually true. But the other factor is, I know is he's big on balance sheet reduction. So what happens if he gives interest rate cuts while they reduce that balance sheet, right? Like that might be his plan, right? And that's kind of just a status quo situation then, right? Like, because you're reducing the liquidity, you're reducing the balance sheet, but you're lowering interest rates.
And this is exactly what I was posting last night, that I was going back and forth with all the macro bears on Stocktwits over, was this is a scenario that I don't think anybody's really planning for, is if he reduces the balance sheet, and if he decides to lower or even keep rates where they are, right, then you get into a liquidity crunch. Anyway, Nick, what gets us out of this mess?
Yeah, so I was I just tweeted
somebody's volume's up a little loud. I hear a lot of feedback.
I don't think it's mine.
It was GP.
Oh. So I was thinking a lot about like the timing of Cookie's call versus so much like the price. And I was kind of, I don't know how to say this. So how he's got those like triangle, he's measuring out like patterns and time and shit on his charts.
There's said triangle right there.
Yeah. So I was looking back at like, end of 2024, 2025, where we kind of double topped, and then all of a sudden the tariff rollover happened. And so I kind of measured out a triangle in a similar fashion, which was kind of the reverse of the, we were talking about the golden ratio and how when price moves, it generally moves very symmetrically, like give or take like a little bit, sure, but generally speaking, like if price moves 100 points, it's going to move 100 points, pause, and then it's going to move another 100 points, pause. Well, the Qs, if we saw similar behavior as the tariff rollover, both that the timing would align with Cookie's call kind of end of March, early April, but it would just be in the reverse of what he's talking about. So he was thinking that we were going to peak out then. Well, what if price completely rolls over and we actually bottom out then versus peaking? So I don't know. That's just kind of what I was looking at. What's going to get us out of this mess? I don't know, and I don't really care. Like the charts will set up and present themselves just like they did when the tariff rolled over. Like we'll put in a capitulation low, we'll get a rally, we'll look for a follow through day, and then it'll be off to the fucking races again, or we roll over and we just go into a nasty 2022 bear again.
We're already in a 2022 bear, Nick.
Yeah,
Like,
I mean, right, like, yeah, for
like,
sure. Like that was, kid asked her.
Look at what's going on in so many names, right? Look at what
They're
they did to
getting
Unity
smoked.
software. Look at what they've done to Oracle. Look at what they've done to look what they're doing to AMD today, right? Like that was a great earnings and it's still getting smoked. So what we're getting data which is saying regardless of your earnings, we don't care, we're selling, right? And so you gotta, like, we're already in a 2022 bear. Things are more than 50, 60, 70. Look at software. It's in like an all-time bear.
Yeah,
right?
but the boom and bust in a lot of like in momentum and like the hot stocks that are high flyers, the boom and bust are going to be perpetual because
Microsoft.
yeah, well, I
Microsoft-
mean, Microsoft's probably selling off because
Magic,
Gates
right?
and all his STDs he's catching on Pedo Island. I don't know.
Nvidia? How about that?
Well,
Jensen
yeah,
got no STDs
Jensen probably
that
wasn't
I know of.
there.
Still in the range.
Yeah.
What I'm saying is, like, they're giving us the data, which is something has changed in someone's perspective or a group of someone's to say that we are selling down even the most valued of stocks, right? Like you couldn't find a better allocator of money in the last 30 years than Jensen, and he's still getting beaten to all hell, right? So Google, Amazon, if these earnings are great, you'll get a one-day pop, great, awesome. The question is, can anything sustain? And so far, for 4 months, since October 10/10, we have not sustained anything, right? It's been distributive at the top and accumulative at the bottom until the bottom falls out.
So I think there's
I was bullish, but the price action is telling us that we need to step back and look at what's going on. And to me, until something changes fundamentally from that perspective, there is an aggressive seller in the markets at that 26,000 level. Which is
that's my question, right? What changes that? Does anything change that?
Yeah,
I mean,
time. I think time and perspective.
Yeah.
From
I think we just went through the. Go ahead.
No, I'm just saying, like, if all other things aside, just the AI piece to this, right? Like AI and robots, whoever's moving money around is trying to figure out how to price these things in. What are these things actually going to be like? What is the fallout going to be? How is this really going to play a role into, let's just say the IGV, for instance? Like, we don't fucking know. And they're trying to figure it out. Once enough time has passed and a lot of the things have been worked out, prices will stabilize and then kind of continue in the direction that they were going. So I just think it's like time and perspective, like, is all that we need to.
It's Netflix.
Yeah. Well, I'll say this, yeah. Nick, you kind of set up the quote that I was going to say is, I think since October, we've been going through this and you're seeing it now really play out really well. Is short term, anytime there's a new technology, short term, people are usually overly optimistic. But long term,
yeah,
you're typically underestimating it, right? As well. So like, when do we come to that resolution? Again, it probably takes some time. It takes some pain. Our software stock's done for forever. Yeah. Again, I mean, it's hard to not say that they're not going to adapt to the AI age. They're a software company. AI is basically it's different, but I mean, they can add AI to their company, right? Like it's not like out of the realm of possibilities. So like not every software company is going to die. I think that's kind of the stage we're at.
Yeah, I mean, if you zoom out on a monthly on the Qs, the 4-year moving average was kind of the big MA that we had been talking about for the longest of time. And anytime price gets too extended, especially from that 4-year, we start to see a pull in. And as of right now, the 4 years held pretty damn well since what is that, 2009? Even going back to 2022, we pulled right back into the 4-year. We rallied, and as we pushed off of the 2022 bear, price grinded and it kind of melted. It didn't like catapult higher as it did off of the TerraFlow. The TerraFlow was like a much more like sprint off the lows versus kind of like a slow grind. Especially if you're looking at like the monthly. So to see the type of consolidation that we're in currently, as much as it sucks, and was, probably a little difficult to maybe time on the individual name basis because, just shit was, money was, rotating and stuff was flying. It shouldn't be that surprising. Like we're pretty extended from the 4-year as we are. And I don't think anything is too surprising where we're currently sitting. I think that if we
bottom the market.
Yeah, I don't know.
So
I'm just looking at charts.
Yeah, just looking at the Qs here. I see one thing that's pretty obvious is the monthly 20 seems to hold. I know, Matt, you don't use moving averages a lot, but other than the 22 sell-off here that we experienced, that moving averages seems to be legit. And that's all the way down here at 544. So we're talking about, what is that? Another 10%, 9% down potentially.
And so that'd be an easy 20% correction off the top.
Yep.
It'd be a lot better than 2022 or 2008, that's for sure.
The question is,
I mean, I think we would all rather have it over quicker than, we'd rather the price do similar to what it did back in April, right?
Yeah.
Than an extended period like 2022. But Matt, were you going to say something?
No.
Oh, GP. Somebody.
I'm saying what's left to correct, right? And that's like there's Apple.
I mean, probably probably Mag.
Yeah. So but that's so if we're talking about like software, right? And everyone's like software is over. My viewpoint is, and I actually took on a long today in Now 10 at 106, somewhere around there. And what I will say is software got smoked, everything under the sun. And the leader of software finally caved in on ServiceNow. And so it was at a level where I'm like, I can define my risk and reward. I'm in and out within $1. I'm okay to take that. I'm okay to take that trade. If it materializes in something more, great. If not, it's not the end of the world, right? It's a small paper cut. It's unless it gaps down again and again and again. But when you have the leader of the software space bottoming out or potentially bottoming out and getting sold day after day after day on insane volume, you're probably closer to the bottom in software than you are another leg down. That's my view here in the conversation of rotational markets. But why I took it here is because it's a risk conversation, because if this is not rotational and everything else has another leg down, software is not going to stop, right? Like it's not going to all of a sudden stop. So define your risk, define your profile. If you can't find an edge, we talked about this a lot, Nick, yesterday, which was no edge, no trade, right?
Yeah.
So if you don't have an edge in this market, step aside, wait for it to give you an edge. And if it doesn't give you an edge for a month, then so be it, right? Like if you're watching options flow, Matt, I know you're a big part of this conversation when it comes to options, but that's a mess right now, especially with these 3 times a week options on a lot of these individual names. The noise is going to get astronomical, and we're approaching the point where the derivatives market will outnumber the equities market, right? We're not there yet, but we're getting to the point where with all these things that are coming in on we're going to have hourly options soon, right? Like that's how ridiculous this stuff is getting to be. And you're like, if someone wants to really drive the price down on a day like today, boom, buy a shit ton of puts and you're going to drive it down.
That's a really good point. And I think it's going to be really interesting that they're going to start basically doing 0 DTEs on everything, at least that's super liquid, right? We're going to start out at 3 days, and you're going to see it eventually. I don't know, where it goes to. I think it was a couple weeks back. I think Brian Shannon had a post and I commented on it. I think it was like, I don't know if it was ONDS or something like that, right? Like, why do you need 3 or 4 or whatever it was, 2 and 3 times ETFs on a ticker like that, right? Like,
Yeah.
Bull markets create the products and bear markets really kind of clean them up. So we'll kind of see how that plays out. But I mean, I would think the big names will stick. I mean, we'll see how crazy they get with it, but it does add an interesting dynamic to the markets, and it does kind of produce a little bit more volatility. If we do get the hourlies, like almost like you're talking about, or even like half days,
let's just head over to Poly Market.
That will be real interesting. I don't really want to see that, to be honest. As an options trader, even, it's just not something I don't think we want to do to the system. But if they see revenue, they're going to take it too. So my concern is options overnight, right? Like I really don't want that. So
no. So there's one thing that could change this market, Ben, and something that I'm kind of tracking. If you're watching, you were just talking about Poly Market, right? So Poly Market, it's pretty much a guarantee that Warsh is going to be the Fed chair, but nothing has been set in stone. And if you're watching a little bit, Judy Shelton, if you're not familiar with her, try to get familiar with her, is starting to creep up in the Poly Market. So if Warsh does something to piss Trump off, or Trump decides to change his mind because Warsh is not going to give them the rate cuts he wants or whatever, Judy Shelton might be a sleeper pick, and that could at least provide some relief in terms of.
Yeah, she was in the administration in the first term, and she's even gone out there and called Powell an emperor. So I have no doubts if Judy Shelton were the nominee, then we're going to get very low interest rates. And yes, I know the Fed chair only has 1 vote, but you also whip those votes too, right? Like there is some soft power of coercion and convincing that comes from the seat of the Fed chair.
All right, say that last part again.
There is some coercion and convincing from the seat of the Fed chair, right? They are the consensus builder in many cases.
Yeah, dude, how much have we as a group here harped on the fact that Jay Powell has been late to everything, but the overall economy has helped bail him out of just about everything, right?
Well, like, most of the time the FOMC's been late, right? They're late to start and they're late to leave. It's par for the course because data dependence, right? And you're looking for an all clear signal. Hey Matt, just curious, when you're trading, do you wait for your all clear signal to enter all your trades?
Depends.
Right, but it's not a hard and fast rule, right? Like, no, I have to wait till this breakout happens above this level, or I can't enter, right? Like that doesn't happen.
No, very, very. I think we were talking about that. It's like, the strict rules it actually is a deterrent, right? So like sometimes you're taking a specific spot. There's no confirmation, no nothing. Other times, yeah, you're looking for like, hey, the all clear like confirmation, but it really depends. And I guess you could say that with the Fed too. That's usually kind of they're always waiting for that confirmation a lot of the times, and that's why they're always late. They've always been late. I think the only Fed that that was more proactive, Fed chairman. I mean, and I don't even know if, well, I mean, any of us were really alive during it or young. Volcker. I mean, he was the only proactive Fed chair basically throughout history, at least that I'm aware of. There could have been maybe somebody way back when, but the Fed wasn't as big then. So it's.
So you using that as a thesis to sort of frame the Fed, I think part of the problem is there's so much at stake if they get it wrong, right? And it's hard for us who are in it minute to minute, day to day, hour to hour to give them a lot of grace, right? Because they're waiting months or at least a month in some occasion to make some of these decisions. And would you rather be early and be wrong, or would you rather be late and wrong? And obviously you don't want to be wrong either way, but what clears the deck is, all right, we're waiting for this all clear signal. And unfortunately, I think that puts the Fed always looking like they're behind the 8 ball because of that, probably too much caution.
There's another dynamic too. They're always trying to lead the market, right? Because they don't want to catch the market off guard, because that's when you can break things. The market likes to know ahead of time, certainty. When the market doesn't have some form of like heads up, it's going to react, and it's going to react typically volatile, whether it's good or bad. But it's going to be volatile, and they're always trying. That's one of their things that they're always trying to do, is kind of give that lead in to like what we're going to do. So that's another reason why you don't really see the knee jerk reactions.
All right, we've had more macro talk on this fucking show than we've ever had before. GP, what you're giving me the money sign? What's up?
So it's the, for me, that's probably just the Indian Italian sign. So the thing is, right, like they lost the plot and they lost me completely. I was okay on the JPOW when they are like, they're after Trump comes out, and who knows if this is real or not, but he's saying the data's all wrong, right? He fired the BLS chair and all these other people. And so we've been listening to data that's been wrong for 2 years now, is what you're saying, if you believe him at face value. And then JPOW comes out, the next FOMC said, we're data dependent. You're like, yo, what? How can you be data dependent? That's not accurate. You can't be, right? Look at the real world economy. Step out of your little office and go look at small businesses struggling to get loans to continue their businesses and stuff like that. We need to cut rates, not because the markets are hot, but because you want to spur growth. And KRE is telling you that it's going to happen, even if Warsh is a hawk, right? And that, I think that's the part that, so we're selling for sure, but that KRE is telling you that after 17 years at the GFC crisis highs, we're trying to push up and above, even though we are selling the piss out of the market right now. So,
hey, GP, just one thing, like, and I'm going to bring it back to software real quick. Software is a high margin business, right? And they also have high multiples. And I think sometimes a reset there has to happen, and they tend to be one of the first cohorts to go. We happen to be bouncing right off that 600 spot that Matt brought up. But Nick, one thing that I think Cookie must be watching, because he emailed me. He said, "Ha ha ha, that's super neato." He knew that we were going to have a correction, and I guess according to his message here, it's happening now instead of later, and that kind of lines up with what you were saying just a few moments ago. Yep.
Yeah. So if I guess what I was trying to say was that I was trying to think about the timing of his call versus like the immediate direction. So like, let's say, he was wrong. That's why I'm saying, like, I inverted the triangle, and which is very similar to tariff sell-off. And if that were the case, we would break down, and it, like, on a longer time frame, I think it would look really good. And the reason I think it would look really good is because when you have price and it absolutely obliterates the long-term moving averages, such as like the 200-day, the 30 and the 40 week on the weekly, it basically forces time to heal. So like individual names, it takes time for them for their charts to repair. That means we get a whole fresh batch of setups. Like dart throwing season comes back. We don't get dart throwing seasons unless charts are set up. So again, like I was trying to think about like the timing of his call versus so much like the direction and it being high or low. So again, I just inverted the triangle, which, basically, we would be retesting the high of the tariff sell-off, which would be back at like 545. And just from a range expansion, it would kind of play out there as well. So if we have like basically a range from, let's just say 585 to 635, whatever it is, like 45 points, you just measure that down. And again, that brings us to about 550, 553, which interestingly is about, again, give or take, it's not going to be exact, but is kind of the same, very similar price, or there's a confluence in price where that inverted triangle would play out as well. If the degree and the time in which the leg down happens, then the timing would be very similar to Cookie's call, which would be kind of that end of March, April. So like in my mind, what that would look like is hopefully, I
think I have it on the screen.
Yeah. So what the ideal setup would be something very similar to the tariff sell-off, where price, you're probably not going to want to try and catch the knife at, let's say, 545, but price rips down. We put in a day one rally. We put in a day one rally attempt. So it looks like a big capitulation candle. Hopefully price moves sideways, and then you kind of see where we can put in a higher low, and you're buying that first A, B, C, D leg off the low. Ultimately, using the 200-day or that 40-week moving average as kind of like the neckline for, some form of like inverse head and shoulder setup, or a setup like that, where, once price climbs back over the 200-day, it's like, fucking, let's go. Because that's what we were, when we were walking everyone through the tariff sell-off and going through those candles day by day. Like if you go all the way back on the Qs, all we did was had the, fibs drawn from the pivot low up to that massive igniting bar high. And we basically held the 0.5 all the way through while price consolidated within that candle. So I was trying to think of it in a different way. And the reason that had me thinking that is just, like we've been in this range for going on 22 weeks now. If we haven't broken out, what's going to break us out? If we're going to break down, again, we're still within the range. So we don't, until that 580, 585 gets taken out, we're still range bound.
So quick poll, Matt, buying select names, but no major moves. GP, buying select names, but no momentum trades. Nick, what are you doing? Are you sitting on your hands, or are you trying to find some of these other things to trade?
No, I'm trying to find other things to trade. Like I have my watch list and I've got my alerts set. If alerts go off, they go off. If they don't, they don't. It is what it is. I just, like I was kind of saying pre-show, I'm too much of an optimist to be very good at playing like the swing short side. So intraday, like I don't have a problem with it if I'm day trading, but I think every kind of counter trend bounce that's what violent like is going to shake me out, because I think the overall market's then going to reverse and we're going to resume trend higher. So
Matt, GP, that kind of encapsulate what you guys are doing. I know you're taking some selective shorts right now, but no Momo names. It's all just your bread and butter Verizon Medtronics of the world.
So I'm in. We talked about this, right? ExxonMobil, which is doing pretty well today. Rio Tinto, which is also doing pretty well overall. And I got stopped out on Friday out of a lot of names and raised a lot of cash. Those weekly bars were terrible. I'm like, I'm not waiting to Monday to find out, right? That's just. I'd rather have my mental capital. So I'm in names that are. I'm gonna get like Unity. I got caught off guard. I was in at 29, rode it to 50 something, and now it's back down to 24. And I took profits along the way, but this is just miserable stuff. So yeah, it's it has to be selective. You don't have a choice.
Yeah, I'm in the same boat right now. Very tactical, a lot of cash. We'll look at deploying more capital in a way for longer term for personal basis when the markets are more aligned, right? Like you have to either have the flush out likely or a breakout, right? Like, so I mean, we've been in chop for now, since October, and you're seeing the rotation through the sectors. So I'm taking it from like a selective standpoint, whether it's a cyclical trade, which we've been in, or defensive trades. We'll take those and then take some short opportunities as well. Try to produce as much cash for when we can deploy more longer term. But that's exactly kind of I think the market that we're in, and it's just got to let it play out. It needs time and it needs to see where it goes.
So correction over time, price, or both. What are we getting right now?
We're gonna get all three.
All three?
Yeah, the third one's to spare.
I think a lot of the high tech people are already getting despair.
I think so. Like, this is the conversation that I was having with my Discord group months ago, right? Which is, it was related to crypto. They're heavy crypto, and crypto got destroyed and then never saw any recovery, right? And they were like, what should I do? What should I do? And I'm like, for me, I would cut, right? Like, even if it's at not a point where you cut, but like cut and get back in if you want to, but cut so you can save this right here, right? Because once this goes, you're gonna be on tilt. And as soon as you're on tilt, you're gonna do things that are unreasonable, irrational, all these things. You gotta step aside in mayhem and, first of all, be kind to yourself, right? We talk about this quite often. Be kind to yourself. The market is designed for max pain for everyone. And if something you have isn't working, the best thing you can do for your own personal accounts is say, exactly. And so don't there's no emotional concept to the price, right? They're not getting their feelings hurt. Only you are. So if it's a shakeout, fine, it happens. If you've been doing this 30, 40 years, it's going to happen to you more times than not. So just keep that in mind. Overall, take shots with defined risk here. 1% to 2% is where I'd be defining my risk. Anything more than that, you're risking that the move can be a lot worse, right?
Matt, how do you keep your headspace clear?
How do I keep it clear?
Yeah, how do you not let things in the market affect you too much? by getting rid of the losers quick?
No, yeah, I mean, exactly. First off, yes, cutting losers quick, not having, honestly, an emotional attachment. Easier said than done. Takes repetition, to be honest. And you started saying it's 5%. If it's stock, 5% or 7%, whatever you set your stop loss off, that's what it is. It's on whatever percentage of your allocation of the portfolio. If it's an option trade, I'm always looking somewhere between, depending on the deltas that I'm using, between 30 and 50% losses. But you're pricing like, hey, these trades I can lose this whole amount, right? This whole premium, and it's not going to hurt my portfolio overall, but you know, it can also, you know, add that alpha that we're looking for. So there's that way. Honestly, you know, is trying to see where the market's going through the rotation. The rotation can't hold up forever either. Is I think a big thing that we should kind of talk about is, you know, software or, you know, technology. We want to see a bounce at some point. I think that's the one thing that is scary, right? Like rotations work, but the market is very dependent on technology. The weighting there is just too big, and at some point everything will break if you can't get a bounce out of technology, right? Like so. That's kind of just looking at things from a broader perspective, keeping losses very small, and then, you know, willing to take some profits on the way up in this market. That's the other thing, is you're not going to go for home runs. You need to understand what environment you're in. This is not an environment to say, hey, I'm going to look for the home run hits. You know, take half off, take some piece off, set your stop. Gets hit, survive another day until we kind of get a resolution, whether that's downside or upside, right? Like, you know, obviously Trump could taco and say something that changes the outlook from the bear side. It just, you know, it's his market. Like the Biden market, the other, you know, Obama markets are much more calmer, right? You got to understand, during Trump's terms, it's a little more volatile.
Traders love volatility, right?
Exactly. Right. Like I have no problem with it. So I think it's opportunity. So that's kind of how I look at it, is just, you know, you just at moments like this, stay calm, don't get angry, don't revenge trade, honor your rules, maybe tighten some stuff up, and just be a little bit more conservative until we get a resolution.
Matt, when you're on the desk, are there days that you just sit on your is there a day that you just sit on your hands?
Yeah. I mean, honestly, I sat on my hands. I think it was, I had to put a trade on Friday, but Friday, you want to hear a horror story? I had GLD 45 or 475 strike puts for 2.2 and 2.4. My dog, he really needed a grooming. So I ended up saying, all right, I'm going to take a small loss and I'm going to go bring him to the groomers. By the time I got back, all of those contracts were up 200 to 150, depending on the expiration. And we ended up seeing a much larger move than that. So, you know, it kind of put me on tilt. I'm not going to lie. Even people that do this for a living, you do go on tilt sometimes. So I just said, I'm done with anything that's kind of like intraday for like, it was literally like a day and a half. I was like, you know, the most expensive dog grooming in the world. I just experienced. And I just said, you know, I'm just going to take the weekend before I get back into intraday trading, and through one swing position.
When my kids were you know, newborn and infants, I don't know how many times that I would go change a diaper, and all of a sudden the trade has, I would either do what you did, right? Close the trade, and all of a sudden it worked out, or I would stay in the trade and it collapses on me, right? And it's just like, it's the most expensive diaper change in the history of diapers.
Yeah, I probably should have just set a stop and left, but, you know, I was like, you know what? I don't want to hold the risk, and I'm not going to be buying it. And it's, you know, that's exactly when it happens. And that makes you, those are worse than taking the loss, right? Like that eats at you, and that causes you to make mistakes. So,
and that comes with seat time, right? Nick, we talk about the mental headspace a lot, and like you've got to learn to take those losses, but at the same time, losses never feel good, but you really compound that even more when you just let things get out of control and just, you know, snowball down the mountain.
Yeah. I mean, I think the worst losses are I would have, to speaking to GP's point, the mental side of things. And we talked to that, we spoke to that show. Yeah. We spoke to it on that show several weeks ago when I was talking about, I think, DOCN, where I completely round tripped the trade. And it was like, granted, I didn't really like lose money on the trade. It certainly felt like I did. I I
It's
think
actually
the small,
the OCN's actually holding up better than most. Sorry.
yeah, it is all right. I think small losses are relatively easy to take, but I think I'm just kind of numb to the haircuts. It's ones that I've like allowed to get a little bit bigger, or I get too big in a position and then it gaps against me the next day. Those are fucking kind of a nut kick, nut punch.
Friendly reminder, you're talking about the gold puts, Matt, is a lot of people think consensus trades don't work and contrarian's the way to think about the markets. Gold and silver puts, I know they got paid on Friday, was one of the most consensus trades in the market, and everyone got paid. So just keep that in mind when you're analyzing these markets as well. Like there wasn't a single soul on the planet. Even the gold bugs were like, yeah, this needs a rest, right? Like, so it was one of the most consensus trades in the market, and it worked in spades.
Yep. Well, I mean,
So,
the regulators, the CME, the exchange, they're raising rates. They're trying to push speculation down, right? Like they're really don't want it to get out of hand.
But a
So yeah,
38% move down, dude. 38% in silver is not regulations.
No.
It was a designed move to destroy January month end, whatever settlement stuff that they had going in the physical, because it's a commodity, right? Ultimately, so yeah, just that, like, but a lot of times we're like, oh, it's so oversold or everyone's bearish. That doesn't always work. Was my point.
We're rallying.
Right? So,
no, it's not. It doesn't always work. And there's a time for contrarian and there's a time for consensus, right? Like, and it's you should really learn one and then you can learn the other at some point. But you should really be able to take hold of one trading style first before you try combining them, because otherwise you're just likely going to eat yourself up a lot of the times. And that's how, I mean, I learned more of a consensus trend to begin with. And, over the last, 5 years or so, like I've really learned a lot more of how the mean reversion trade really works. And, you still lose, but that you can get huge opportunities, but it is contrarian and it's not as easy, to be honest. The consensus is you can stay with that until the boat gets too full. You can kind of protect yourself, but it's hard to go against the grain. It is the tougher trade.
Nick says we're rallying. It's the trade right now.
So if you were gonna play like the Qs, for instance, in a if-then scenario, like you're coming from, like, let's say you're coming from a cash standpoint, and you thought 600 was gonna hold, and you throw a starter on versus 600, what you're wanting to see is 607 get reclaimed and hold. I mean, so if price can't close above 607 today, like fuck it, be gone. At least for the remainder of the day. But if it can reclaim that 607, I'd be in the camp that we're gonna go right back after the 625, 630. Like we're literally just ping-ponging in a fucking range, and
you're not bullish enough, Nick.
Well, no, it's like if you're approaching a trade in an if-then manner, and you're legging in, legging out, not all, like this idea that you have to be all in, all out, all the fucking time is the reason people get super chopped up and end up imploding. You don't, like, even if you got blown out of all your position and decided to like try to put on a long-term position and we're gonna average down. Granted, that's not the way that I do things, but like, and still wanting to play versus 600. Why would you be all in at 600 when you think that you might have an opportunity at 585 or 550? So I just was going to say, like, in an if then scenario, and you're looking at the Qs right now, you want to see that 607 kind of pivot low, get reclaimed, and then, kind of.
I said this a couple of weeks ago. If you've got spots on your chart that are buys and you've already identified them and you're not playing that, then you're wasting your time even putting spots on a chart, right?
Yeah, right.
So if 580 is a possibility and 600 hit, you need to have some money ready for 580. All right, we got to wrap it up. Last word, Matt, you're our guest. Hit us with something to to make us feel a little better or to prepare us for what might be ahead?
All right. Honestly, it's kind of, I think we've preached it, but it's stay tactical in this market. I mean, don't rule out a rally. It does look very bearish, but don't rule out a rally either. You need to be able to, adjust quickly, but just keep everything tight. And, at some point we're going to turn, right? Like, so you want to start getting into positions. You'll be able to build confidence that way. And then I think my very final little take here is I should be looking at the chat a little bit more often because I'm seeing all kinds of crazy things that are being said here about knees and feet.
We love the chat.
So next time this is going to go up in a window. I'm like, what is going on here?
We love the chat. Chat's where it's at.
Things like that. I mean, hey, you got to have fun too. So like, laugh, and don't put yourself into a negative state, no matter what happens in the markets.
If that's one thing we do, it's have fun. Nick?
Yeah, I'm gonna steal a quote from, I think it's however you pronounce his name, like Qualmaggy. In the hot and popular momentum names, you're not more intelligent than the 10 or the 20 day. If you're in a Momo name and you're under the 10 or 20 or trying, like, don't bother. And on top of that, it takes time for good things to happen underneath the 200 day. So kind of plan, Matt, manage your risk and be smart.
Under the 200 day is not for the squeamish. GP?
We've been talking about the weakness in Netflix since February of last year, and it's accelerated over the last few months. Today, while the market is dying, Netflix is green. That is one of your biggest hope candles in the markets.
More than 1.5% up. Yeah. No dad joke for me today. No, I did this a couple months ago, but Peter Lynch, right? Far more money's been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in the corrections themselves. So just use that as some, mental backstop, right? Don't always throw the baby out with the bathwater. Anyway, that's it. Thanks, chat. Thanks for being here, Matt. Always a pleasure. I love having you on. We love having you here so much. GP, love you. I don't know what your gang signs were there.
I'm trying to do it. I'm not. Whatever. I'm gonna stop.
Nick, love you. Ryan, thanks for producing the show. You're amazing. We love you. Peace out. We love you. We'll see you next Wednesday right here on Stocktwits Community Rip Live.